Hey everybody, it's Eddie from Tokyo. This is your cryptocurrency update from Japan. And in the last video I did, I was asked, why do I focus on the Bitcoin price? Well, currently, the entire crypto market is correlated to that crypto asset. And what drives the price action? It's a combination of macroeconomics, liquidity in all markets, and many think that it also has a lot to do with the Bitcoin futures contracts, whales, and yes, of course, market sentiment. And I am one of those people who personally thinks that the Bitcoin halving has a lot to do with it also. In regards to the macro, we have to pay attention to what the Fed is doing. I've taken a 38-minute video of Fed Chair Jerome Powell from just a few days ago, and I did my best to make it interesting. I think I did, highlighting what you need to know just down into a few minutes. So why the 2% inflation rate target? Why not 3%? And data, why it's so important. What should we expect in 2023? How does he relieve stress? Does the president ever call him? Does he worry about the debt? How do they avoid leaks? Yeah, they do sweep the room for bugs. And what's the road ahead look like? So have a listen.
So, as I think everybody knows, our special guest is the chairman of the Federal Reserve Board, who has now completed 5 years as chairman as of 2 days ago, your 5th year, and now been on the Fed board for almost 12 years. So, Jay, thank you very much for being here.
We believe that we anticipate, is what we said, that ongoing rate increases will be appropriate. And the reason is we're trying to achieve a stance of policy that is sufficiently restrictive to bring inflation down to 2% over time. And we don't think we've achieved that yet. We never say this is what we think will happen. We make a tentative forecast and then we let the data come in. For example, if the data were to continue to come in stronger than we expect, and we were to conclude that we needed to raise rates more than is priced into the markets or than we wrote down at our last group of forecasts in December, then we would certainly do that. We would certainly raise rates more.
You've said your inflation rate target is 2%. But why 2% and not 3%? 3%, could be tolerable, really. I mean, for most of organized history, 3% is considered okay. Why do you want 2%?
So 2% is the global standard, and that is our objective, 2% as measured by the PCE index. And that's not something we're looking at changing. That isn't going to change.
That's not going to change?
Not going to change, no.
But, okay, so you need to get to 2%, and your goal to get there is by what period of time would you like to get there?
Well, we say that we're using our tools to get there over time. If you look at our forecasts, we expect 2023 to be a year of significant declines in inflation, and it's actually our job to make sure that that's the case. But I would tell you that, with inflation, headline PCE inflation is running about 5%. This is on a 12-month basis. Core is running at 4.4. My guess is it will take certainly into not just this year, but next year to get down close to 2%.
What do you do to relieve the stress other than interviews like this?
The usual things. I read pretty light fiction, detective and spy fiction. I exercise as much as I can. As you know, I like to ride my bike. I play the guitar, play music.
Wait a second, is that safe, riding a bike? Dangerous and
it's safe. It's safe if you stay on the bike. And
okay. You're good at that.
That's what I try to do.
And you still play the guitar, or you're still?
I do. Yeah.
Does the President of the United States ever call you with any advice, or you don't really? Did President Trump ever call you, or President Biden ever call you, or?
Well, I think it's a matter of public record that President Trump did used to call me from time to time.
Okay. What did he call you?
No, I haven't had that kind of. I haven't gotten any calls from President Biden.
Okay. Are you worried about the total indebtedness of the United States producing inflation, or you don't think that's a big problem?
Yeah, it's not the level of debt. I would say the thing I'd say about the level of debt is really, it's not. First of all, it's not the Fed's job, but I would say that we're on an unsustainable fiscal path at the federal government level. That has been the case for some time, and it's something we will have to deal with. And it's better to deal with it sooner rather than later.
But the Fed has been pretty good at avoiding leaks of its decisions. How do you do that? Because most people in Washington are not so good at that. How do you avoid leaks?
We do have, we've got very strict rules around confidentiality, particularly around the written materials that we have. We publish these things internally for the FOMC meeting, the memos and the Teal book and all that. But the other thing to remember, though, is, we're not trying to hide our decisions from the public. We actually, in modern monetary policy, we want the public to understand how we think, how we're thinking, and if markets really understand how you're thinking and a new piece of data comes in, the markets will go, well, they're going to do this, and it sort of happens organically. And that happened all last year as we were, talking about raising rates. The market priced in rate increases long before we actually enacted them. So we want to be transparent. We're not looking to surprise markets with these decisions.
And when you're having these FOMC meetings, I assume somebody sweeps the room to make sure there's no bugs and anything.
Yes, all that.
So no leaks.
No, and I want to say again, we throw these numbers around, but the reality is we're going to react to the data. So if we continue to get, for example, strong labor market reports or higher inflation reports, it may well be the case that we have to do more and raise hikes more than is priced in. That we have a significant road ahead to get inflation down to 2%, and I think there's been an expectation that it'll go away quickly and painlessly, and I don't think that's at all guaranteed. That's not the base case. The base case is for me is that it will take some time, and we'll have to do more rate increases, and then we'll have to look around to see whether we've done enough.
It was July 2019 when the Ripple CEO Brad Garlinghouse told Congress in an open letter, "Don't paint us with a broad brush." Well, that is exactly what is happening. I know this is going to be very terrible to listen to, but it's one of those bits of information that if you're in the crypto space, you really do need to listen, because the only way you can fight your enemy properly is to know thy enemy well.
Crypto was the payment method of choice for international drug traffickers who raked in over $1 billion through crypto, North Korean hackers who stole $1.7 billion and funneled that money into their nuclear program, and ransomware attackers who took in almost $500 million. The crypto market took in $20 billion last year in illicit transactions, and that's only the part we know about. That is a lot of fentanyl and heroin, a lot of help for Iran and Russia, and a lot of money leaking out to terrorists. And that is precisely what anti-money laundering rules are designed to stop. Now, Mr. Reiners, you've studied financial technologies, including crypto, for many years now. And before that, you worked as a regulator. Why do drug lords and human traffickers in countries like North Korea and Iran use crypto instead of banks and credit unions or even Western Union?
Thank you, Senator. So crypto pseudonymity makes it ideally suited for bad actors. And when you couple that with the fact that crypto transactions are not subject to the same AML and countering the financing of terrorism.
AML meaning anti-money
laundering and the countering the financing of terrorism statutes that traditional financial transactions are subject to. Again, that just makes it ideally suited for people that want to do bad things.
So in other words, crypto helps those drug traffickers and rogue states launder money nearly instantaneously. Is that right?
That's correct.
I don't need to tell you that her comments distort the truth or that she's disingenuous. That is obvious. But you need to look at the U.S. received the largest amount of fines. Globally, the banks, they were fined $5 billion last year, up 50%. Juniper Research reports that $41 billion in online fraud took place in 2022, with the expectations it's going to reach $48 billion in 2023. If we go with Senator Warren's thinking, maybe we should do away with online payments. It's time, no matter where you live, in the United States or out of the United States, to use the template that is on the Crypto Law website. I'm going to put a link to it in the description below. Please let Congress know how you feel about this. All right, everybody, we're jumping to the fluff. This is the Ota market in Tokyo. It is for farm produce, flowers, and marine products, one of the largest in the world. They operate 3 days a week with auctions. Over 220,000 varieties of flowers pass through this market annually. From growers of beautiful flowers in France, for example, to exotic varieties from Africa, just for the most flower-crazy country in the world, which would be Japan. At the market every morning, it starts at 6:40 a.m. with a manager's meeting, and the auctions begin. It's fast, and it's efficient. Some end up in vending machines. Many others end up in these two-tiered displays, while so many end up in the front of new stores on their anniversaries or grand openings. At the end of the market, there is a deep bow to thank all the bidders. But there's nothing like a flower on the branch. This is a plum blossom, and like I had mentioned before, we're in the height of the plum blossom season, and it's just beautiful. All right, everybody, do take care. Sayonara for now. Bye-bye.